Welcome everybody to a special Thursday edition of Bootleg Weekly, which now doesn't seem to have a very rigid schedule. We can just go live whenever we really want to.
That's bootleg.
Because Roy is officially a retail analyst asking questions on earnings calls. Roy, how's it going?
It's feels like I'm in a dream, man. It's crazy. Just it's been a good year. Yeah, like not everything is going perfectly. I actually got in a wreck 2 days ago, so which is my fault. So that's not fun. Minor damage and everything. No one was hurt, but like everything outside of that is just up and good. Personal life, job, family, stock market.
I'm
Dude,
glad
it's
you're
crazy.
okay, first of all.
Thank you.
And yeah, man, I mean, look, you're holding Palantir, which is up like 55% year to date. You're holding Robinhood, which is up like 62% year to date. And you're holding the only HIMS, which is up 130% year to date, something crazy like that.
Yeah,
So
it's crazy.
congrats.
And the sad thing is, and we'll talk about this a bit too, not all of the gains are mine. Having underwater covered calls, it limits your gains. That's the downside of it. And I'm feeling that not on Robinhood. I was very careful. I thought I was careful with HIMS. Nope. No covered calls are safe on that one. And yeah, Palantir, I've got some underwater too. So
yeah. HIMS is, I closed some covered calls today, and I paid some like an arm and a leg for, because I had 52s expiring on Friday, and thank God I closed them early on in the day, because this thing just went on a rampage. And I'm not going to be writing any more covered calls, man, because like I don't know where it's going to go. It could go back to 40, it could go to 80. Honestly, I wouldn't know.
Yeah, it's crazy, man. The price action, and just we'll talk about some of the reasons why. Give me a second. I'm going to tweet this out. I forgot to do that earlier, and so give me 30 seconds.
Yeah, take your time. For those of you who are invested into HIMS, we are having a nice run. I would imagine that a portion of this run up today has got to be that short squeeze. We got the latest numbers as of Jan 15th, I believe they were, because they're 2 weeks delayed. And that showed an increase in short interest to 33% of the float. And, and that move was up until $37 or $38 up until Jan 15th. And so essentially you have this entire move where we don't know what the short interest is, from $37 to $59 now. So I would imagine that a lot of that is short squeezing. But I'm not sure, right? If we get another short interest number that's just as high, man, it's going to get crazy for this company. I love to see people who made money on HIMS. Love it.
By the way, George, thank you for the gifted memberships. Appreciate that, man. I'm trying to figure out how to gift memberships here too, and haven't figured that out yet. So I contacted YouTube support, and I feel like shorting Google after that, but I'm not going to. So yeah, no, HIMS. I think that's probably the biggest factor, Tevis. It was kind of surprising. So for those that are kind of newer to short interest, let me pull up FINRA. Actually, I had it up in a video. Let's see. So the way this works is we have delayed information. FinViz. Here we go. Even better. All right.
Yeah, HIMS is making all the Sofi shareholders rich.
I mean, like pretty much everybody, but Tanner. I mean, he has $100 worth. Now it's like 200 something bucks worth.
Exactly. I checked on the Christmas gifts today, because Lemonade was up like 14% today, something like that. What I gave Chris, 15% today for Lemonade. And Joby is officially the worst out of those picks. Who would have thought? Who would have thought?
Who would have thought, right?
So crazy. I'm so shocked.
I kind of feel bad for picking him, just because like you, myself, Chris Haggard, data-driven investing, like any of us would have given HIMS.
Yeah,
I just got the opportunity to. So, and I was the last out of the three of us in it. So, But Robinhood would have been my second pick. Still would have been destroyed at this point by Hims. But
Hey man, I would have loved to have actually got a real present this time around instead of fucking Chobi.
a lump of coal, maybe worse than coal, honestly. I tried to give that to Tanner just because, but yeah, regardless. So throw this up real quick, Tevis. We'll talk about short interest. I think that there's other factors too in play for Hims. I did a short video on it too, but we'll go over this. So this is what it looks like. You can see twice per month, and it's delayed. You get an update on what short interest is, and you can see the trend with Hims. You know that it was kind of lower here. It's still high. And this is the percent. When you get in the double digits, it's high-ish. Once you get over like 20%, it's quite high. And when you're here at 33% of the float, essentially, I'm rounding up, that's ridiculously high. And the crazy thing is, usually when shorts are piling in like this, it just presses down the price action. It's on the opposite for Hims. Like you can see that up here, 59.18, up 27% today. This indicates to me that there's probably a lot of shorts covering, partly, maybe even mostly just out of price action. Shorts will tend to cover for two reasons. And it's never because they've made enough money. They're not content for many of them until like the stock goes down to $0. The reality is price action does push them out. It's the same thing as, when you're going long and you're like, oh man, is this sustainable? I better take some gains. It's kind of the opposite of that. They're feeling a lot of pain and they're like, hey, I just need to get out of this trade. And then the other factor is when there's a fundamental shift as well. There are some fundamentals though, Tevis. So actually first, if you were to guess, and this is just a guess, where do you think the short interest will be February 15th when we see that?
Like 25 to 28% would be my guess. It really depends on, well, no, actually, hold on. Because when the next number comes out, it's going to be at the end of February. And that number is going to be for Jan 15th to Jan 31st, right?
Yeah, so that'll come out February 15th at February 28th or March 1st. So one of those 2 days. So, by the way, guys, we will get to questions at the end, as always. So be sure to put those in there. We'll also talk some Robinhood. We'll talk some GameStop because Tevis loves to talk GameStop.
So my point is the short interest will not have been accounting for this 27% move. Even the next one that we're going to see, it's going to account for the move to 41, 42, but not really to 59. It's actually insane that it went up this much, man. It's crazy to me that the first time I ever bought Hims, it was at $13 and we gained $13 today in the stock price.
Yeah. So this I'm guessing though that we see like maybe 25%, 20 to 25%. I think probably a lot. Just recognize between the impact of the Super Bowl, what they're seeing as far as the actual data, credit card reports, website traffic, app rankings, and then they're heading into an earnings call. Like they just see there's a lot of risk if you're shorting the stock. If you're long, not so much.
Look, man, there's a lot of risk if you're long the stock too, because you're buying it at 60 and it's like priced to absolute perfection too. And look, I do hope that it FOMOs to 75. I do hope for this to happen, and it totally might.
And the other thing with Hims is like we're not in this for short squeeze or anything like that. Like if that's what's happening, and I think that it is to some extent. It's a small float stock. I believe it's a little bit under 150 million shares versus like Palantir has over 2 billion. Sofi has like 2 billion. Those type of stocks, like they just will not move even when it's high short interest, just because of the sheer volume of things. I'm not in this for a short squeeze. I'm not saying it's a short squeeze. I do think that shorts are absolutely covering though. Some of them are, and that's pushing the price up because to cover, they have to buy. Now, do you think that we've seen the last of the $20 range, Tevis?
Yes.
I think so too.
Yeah.
$30 range.
We might see high 30s, but I don't think we're going to see low 30s. I mean, granted, like something could totally happen and this could see the teens again, but I think the likelihood is that we pull back and we settle. Honestly, man, who knows with this thing? It's on such a parabolic bull run that like a pullback. It's had like 2 red days in the past like 3 weeks, and both of those pullbacks have been so short lived, not even a single day, and both of them have been like down a maximum of 10%, and it regains it and then some the next day. It's like
That's crazy. Yeah, usually it's volatile both directions. I still stand by my prediction on Tuesday, or was it Monday? No, it was Monday, that we'll see a lawsuit leveled at HIMS by next Monday. I think that plus any rumor about semaglutide going off the compound list, the shortage list rather, I don't think we've seen the last of the 30s. I could be absolutely wrong. Now for myself, I have a lot of calls, a lot of shares that are pretty deeply underwater. So some of those I'll take as profit. I think a little bit of the position I'll take as profit and just use it to roll out calls into earnings at a much higher level, because I don't want to exit on my position. I just, this is not cheap. I personally would not be buying HIMS here unless I was a trader, maybe, just because of momentum. But yeah, long term, I think that there's a lot left in the story. But if something goes up 27% in a day, it can also go down 27% in a day too. So just be careful, guys.
it could, definitely could.
Save my covered calls.
Yeah, like I got a portion, and maybe we can just answer this question while we're on the topic.
Yeah.
Are you still holding all your shares, or do you have covered calls? So the covered calls, Elijah, I got half of my shares called away at 41, I think it was. And but the good thing is that I have a shit ton of leaps on him for 2027. So those are up like 300+%, which is great. And then I have the remainder of my position, which I had covered calls for at 52, and I closed those out this morning. So I'm not going to write more covered calls on that. I'm just going to let that run. And then I also wrote some pretty aggressive cash secured puts, like in the money cash secured puts, which is, not even in the money anymore.
But, they were so degenerate, and now they're not even that degenerate. So
insane, dude, insane.
Yeah.
So we'll see how it goes. I think if the bull run continues, I might close, because those in the money cash secured puts, I wrote them out like 2 weeks because I was like, okay, like I'm scared because this is fairly, and I wrote a small amount. I only wrote like 5 of them. But if HIMS has another like 10% move, 5% move, whatever tomorrow, then I might just close those out for like 20, 25% profit, in 1 or 2 days, which is great because like I'm still making money on the run up. I just don't want to be locked in case like I get caught when it falls down. So like that's something that I wouldn't suggest, because you're chasing at that point, which I am. But at the same time, I think like, if I do get caught on those, for whatever reason, I can always roll out and down, or I can just let myself get assigned at a higher cost basis and then just start averaging down. It really depends. I'm personally willing to take that risk with that amount of money, but the vast majority of my position is like long leaps and doing okay.
Yeah, sounds like a good play. It's an interesting time to be in the markets, and yeah, this HIMS is just doing crazy things. So we'll see volatility both ways. So, but that earnings, I'm looking very much forward to that. So, let's talk Robinhood. Did you catch any of the earnings?
I caught almost all of the earnings. I caught all of your questions, that's for sure. That was great. That was amazing. And I also like posted on X about it, and people immediately started shitting on Sofi. And I'm like, guys, I'm not posting it as a critique to Sofi. Like, I'm just proud of my friends for like, and just the whole retail community, I think, gets a lot of validation, because you have like, Tanner from his YouTube channel and Roy from his YouTube channel. And then it's like, okay, so-and-so from JP Morgan and so-and-so from Needham, like after you guys. And I was like, that's cool. So, I thought that part was really cool. And then, the growth rates and all that was great. But like I definitely joined to hear your guys' questions.
Right. Yeah, we appreciate that. Yeah, that was an exciting moment. Nate, you said it in the comments too. You know, myself, Amit, Tanner, and Evan from Stock Market Investing on Twitter. He's huge. All got to ask questions just right alongside, treated like analysts, and that was a neat experience. I got a video like kind of detailing, you know, how that all worked and what that was like, and it still doesn't feel real. Honestly, it's just one of those things where I can't stop smiling. Maybe Hims makes a pill for that. So no, not really. But no, it like beyond just that whole experience. And you know, I think they did their first live video format for their earnings call, opening up things. I hope and I think for other retail companies down the road to kind of do the same. I don't know if Sofi would ever do it, but there's no reason to like dump on Sofi for that. But I think that there might be more and more that kind of see what Palantir is doing, what Robinhood is doing, and they just say, you know what, this has been good for the company, it's been good for the stock, why not? So, but as far as the actual results, like they blew it out of the water. Let me just show just a couple of highlights. Pull up my account here. And there was a lot of highlights. Now, Robinhood is a very cyclical stock. You know, what it's in is very, very cyclical. So let me just show, I'll just use this post to be lazy rather than go through the slide deck.
Oh, there's also this comment. Man, oh man, oh man.
Oh,
It's still so far out. We're still only a $13 billion company, but who knows? Maybe by the end of next week, we'll be an $18 billion company.
Yeah, so, I don't think Hims is getting in the S&P 500 this year. Maybe quarter four. The hard thing is, and I've done posts on this as well. There's a lot of very, very exciting, very good companies, including Robinhood, that are kind of on a waiting list for the S&P 500. Like even like I'm not the most excited about XYZ or Block. Block's on there too, and it probably ahead of Hims, not just because of market cap, but actual revenue and everything too. So, but I do, and if you recall, Tevis, the thing that pushed me into Hims finally to actually look into it beyond like you pounding the table was doing that post on the S&P 500 inclusions. And I was already beginning to think of Hims as a future S&P 500 inclusion. Now, the actual inclusion doesn't mean a lot when it's a heavy institution stock. When it's a retail stock, it usually does help the price action a good bit. But in my mind, I was like, oh man, I'm already thinking of them as a market leader, as a company that grows into that size of a market cap. Why am I not in this thing again? Sometimes it's as easy as that. So, but yeah, throw this up right quick. We'll look at some things. So first, adjusted EPS of $1.04, 52 cents was expected. They had two things kind of happen to them. And I know it's a little bit blurry there. Basically, one of these regulatory fines that they had, they said, oh, actually, we overcharged you, have 50 million back. Like, okay, that's pretty cool. And they did a Sofi too, where they realized all of their tax losses from previous years. So that kind of boosts it up. And that way, in the future, that adjusted EPS will be close to the actual EPS. So that's not a huge deal, but it's pretty nice. Revenue was up over 100% year over year, $1 billion, which is absolutely insane. And then like this bright yellow number, you know, for options, it's like, yeah, good steady growth. That's nice. Up 8% quarter over quarter. Equity, that's stocks, up 48% quarter over quarter. And crypto notional volumes like just through the roof. Like up 393%. If this was year over year, I'd be like, that's amazing. That's up quarter over quarter.
Which is crazy because like we should have totally seen that coming with the Trump pump.
Oh yeah, no, like for real. So I did. Amit had like a live stream the election night, and I usually don't do political things, but I was like, hey, this impacts the market, so I'll just jump on and have fun with that. And I did not see Trump winning. I didn't think it was going to happen. It did. And while that pump was going on, I'm like, the clear winner to me, and I didn't know what to think about in-phase, Tesla, all those things. But the one winner that I saw absolutely was 100% convincing, and I wish I bought more in light of that, and I didn't. I bought some, was Robinhood. I'm just like, okay, all that regulatory scrutiny from the SEC is done. It's gone. It's going to be very bullish for crypto in general. The market's obviously liking this. Overall, there's more volatility as a result of Trump. That's plus and minus. But I mean, it's really good for Robinhood. And like the craziest thing to me is this: their operational costs are basically almost flat. Like this is up a little bit in 2025. There's a bit, but being able to grow revenue over 100% year over year, and then you bump up a little bit, and part of that is provision for credit losses. I mean, that's insane. Like they 90% of their costs are controlled; they're fixed, and so like that's one of those things when Amit, Tanner, and I were talking about these EPS targets of the street. I'm like, hey, they might miss, and we're all like, where are they getting these numbers from? Well, what it was is 90% of their costs are fixed. And so as a result, if crypto, well, let's go back to that slide. If crypto does this, it's not going to do this every quarter. They did release January numbers. They look good, but not like this. By the way, January numbers are basically equivalent to quarter 2, 2024. That's how insane it is. 1 month. No, when they have times like this, they're not paying like a whole bunch of extra money. Like PayPal, because of the transactional nature of that business, if they have revenue like this, their expenses also rise by that same percent. Maybe a little bit less just because of volume discounts, but that's the reality. Sofi, same sort of thing. There's additional expenses as they grow the revenue, even something like Palantir. So it's kind of unique in the way that they're positioned with that. And just thing after thing, like funded customers, like you can see the acceleration here. Usually we'd see them grow back here, by 100,000, 100,000, 100,000, 100,000. Big jump here as they offered some extra benefits, another little bit of a jump, a small jump here, and then look at this leap. And then with the gold revenue, well, that's the wrong slide. I think I removed the gold revenue from the slide. The attachment for gold subscription is over 10% now. That's just assets under custody up 27%. Like looking through it, I found one thing that was like not bullish. It was like kind of like, something to keep an eye on. And everything else, every freaking thing else, even their guidance, which they kind of don't do full like guidance for revenue and stuff. They said they expect dilution to be flat over the entire rest next year. They're buying back their stock. Contra revenue even came back better than expected, but it's just about a perfect quarter. It's unreal. And we had high expectations going in and they beat it. And so, the stock's pumping. My $70 covered calls are, I think, safe, hopefully. One more day. Give me one more day. And I will totally roll those. This is a company that, like Hims, I can see myself like at a certain price just saying, enough is enough and I'll take some gains. Great company though. But yeah, Robinhood, the long-term story is just so good, dude.
So let me double tap on that then. Do you see a lot of upside here for Hood? And then also, what is your long-term 5-year outlook on Hood? Because look, it's $56 billion right now. People who are buying right now, not at $8, not at $14, not at $20. People who are buying right now, like what can they be looking forward to? They did $1 billion in revenue, and even if we assume, and I don't know if you can make that assumption, but even if we assume $1 billion every quarter going forward,
they won't.
But I'm just saying, like even if you could, that's still 12 price to sales or more. So like what should people be looking for right here?
Yeah, I don't think price to sales is actually the best measure with this kind of company just because of that control of the costs. What I have my eye on is basically crypto and what they do with it, with the Bitstamp acquisition. That one's really interesting. I noticed a lot of the focus and for us, like we talked about how big the SEC change is and what Galileo can do as far as offering products to banks and others that are wanting to onboard with crypto. Robinhood can do the same through their Bitstamp acquisition, which is supposed to, I believe it's supposed to be finalized in quarter 1. I'd have to go back. They mentioned it in the earnings presentation itself. So this will be their first business to business product that they have, period. Like they offer some that businesses can use, but this is like direct business to business. Robinhood is very, very competent when it comes to crypto and crypto assets. And so if they're able to, depending on the ramping of that, I actually think Robinhood's going to do better here than Galileo. I think both will do well. I'm not bearish Sofi, Galileo, or anything like that, but this is just their wheelhouse. And Sofi is very good at handling crypto too. So no shade on that.
I heard on the call, Vlad was saying that, one of that, well, first of all, he was saying there's multiple paths to 10x from here, and we're exploring them all simultaneously, which was very bullish to hear. But I also heard him saying that a lot of what we're offering right now for retail, we want to extend to the institutional side. Like that's another potential avenue for their growth, which I thought was also really cool, because all of a sudden now you have this whole other addressable market that you just didn't have before.
Yeah, I mean, like that's the thing, is they launch products out of nowhere. And so there was a mention just on one of the slides. There's almost a footnote. Actually, it's tiny, tiny font. It's in the disclosure section. Usually that's dry and boring and stupid for most companies. Just like, oh, legalese. Dude, there's so much meat that they just cram in there. That, by the way, was like a cheat sheet for any questions that I might ask, because I'm like, the good stuff is in that little fine print. And I'm sure analysts know this too. But so they've launched their futures platform. Robinhood, and Vlad has reiterated this a number of times, that they expect this to have a $100 million, they had said 9-figure annual run rate at some point. Like this is not going to be this year, maybe next year, maybe in 2 years. And that's not necessarily 100 million. That could be a lot more too. CBOE has done well with futures as well. There's a lot more interest in futures as a product. And this is one of those things where you might say, well, there's not a lot of retail presence. Well, when Robinhood kicked off options, the way that they did this in the United States with basically no fees, you just have regulatory fees. Options went in, and it's just such a much smoother system than what they had before. Options interest increased dramatically in the United States. And I don't know that futures will catch on quite that fast and quite that much, just because there is some more risk. It is a leveraged product. There is margin. Be careful with it. Futures are something I don't understand very well, but I'll dabble with it when I get access. But that'll be a big revenue driver. They have international expansion. So UK, they've expanded there, but it's an expansion at this point. The reason why is they just announced options now. It's a little bit differentiated from here in the States. There, because they don't allow payment for order flow, they do charge a fee for options. And it's like 50 cents per option, I believe, for gold members, which is lower than pretty much anything else in the UK. Better system, better interface too. Free for like 3 or 4 months, something like that. But they're missing ISAs and SIPs. And these are basically tax advantage accounts in the UK, something that they're working on that they will release this year. Once they do that, I think that they begin to convert a lot more people in the UK, especially if they add some incentives to actually onboard to their platform. And I mean, IBKR and others, there's some good competitors there, but Robinhood just tends to destroy the competition. And they offer cheaper prices, a better user experience usually. Some people like certain features that maybe that they don't have, but it's hard for them not see them do that well. I think Singapore, they'll actually see even more rapid adoption, just because that's just a hub for trading and investing, and they're very, very conscious, versus UK is a little bit more conservative on that end. And it'll take time for people to kind of get used to that, if that's something that they want to be in. And the events platform, somebody mentioned that, the prediction market, they had to pull back the Super Bowl thing because of CFTB on the same day that the CFTB said, hey, we're not going to regulate by slapping wrists and stuff and giving fines anymore. Ironic. But they mentioned also in this earnings on the slide deck itself that they're building a event contract platform. So curious what that looks like. We've seen through some surveys and things, and there was even a question on this about micro loans and that sort of thing. It seems like Robinhood might dabble into that too. Credit cards even are going well. Like that was like the bear case to me, is credit cards might fall apart, might not do well. Unit economics are working well. The only thing that's not going well is people that are on that wait list, which gets longer and longer. And I understand the frustration because it's a great card. And once you have that card, you're no longer mad that you don't have it.
Is Robinhood targeting 401k plans? Like some major companies are doing Schwab, Fidelity, and that's a ton of assets under management and transactions, is what Sigig is asking.
Yeah, that would be a good question to ask Vlad. Maybe if I get a chance, I'll ask. One of these events. But I'm 100% sure that they've at least thought of it. I don't know where they're at on that. I know that the margins for that kind of product are a lot lower, but I did notice there was a. I'd have to. I won't dig in my app. I have a post on this from a little while ago. Let me see if I can find it real quick because it was really interesting. It looked like they were building exactly that, and it's. Give me a second.
Yeah, I think Nate, this would be wild. I don't see like, I don't know, man. It's not. I know, like in 10 years. Well, I guess 5 years. A trillion is not going to seem like a lot of money, but it's still ridiculous for companies to be $1 trillion in market cap. Like you can't just have any company. Like, will Sofi ever be $1 trillion in market cap? I don't think so. I mean, it depends on how far out you go, I guess, but like that's not even on my radar at all. Robinhood, I mean, I could have said the same thing for Palantir, but Palantir is already at 250 billion. So it's I guess for me, like I just see the trillion mark as still such a massive, massive milestone to the point where like 10 years ago, you didn't really have any companies that were $1 trillion. And now you have, just the FANGs, and then more and more companies are entering that club. It's crazy to see. But yeah, I mean, I sort of am with the crowd here and just wondering how, like, where do we see this company going, right? Because if they're going to keep growing 100%, like, what is their guidance for 2025, Roy?
They
Like,
don't
what
have
is
it.
their, they didn't
They
provide.
don't. They don't. No, they guided on OpEx, which is basically flat. They guided on dilution, which they said flat. They did say that they foresee double-digit revenue growth. Double-digit could mean 11 or 10% to 99%. I'm guessing it's going to probably be around maybe 40%, 45%, 50%. If we do get a crypto winter towards the end of the year, if it's sooner or less, if it's not at all for some crazy reason, could happen. Don't see it that way, then it could be higher as well. Comps are a little bit harder. That's one of the factors too, because they really started accelerating. But yeah, at 5 years, like I think Nate's right that it could be 250 billion to 500 billion pretty comfortably in 5 years. Very cyclical. So it's not going to be straight up like Hims likes to do every day now for some reason. So,
Yeah, I mean, like, I think if they put up 11% growth year over year, they're going to tank really, really hard. If they put up 99% growth, then yeah, you could see them being $100 billion company by the end of by the end of this year. It really depends. So I think that guidance is kind of an important piece to have.
yeah, I mean they never guide. That's like this is the most as far as they've ever done for guidance, and it just partly because it's a full year, partly they want to make sure that they're being a little bit more transparent. But they give monthly numbers and monthly reports, and so I think that a lot of that they just say that's good enough. Obviously, it's not penalizing them. So why? And the other thing too is like how Robinhood does depends on how well the markets do. Like if the markets fall apart and we go into a crypto winter at the same time as a bear market, like Robinhood could be back in the maybe upper 20s. I could see that. Like that's a possibility. Now, I think that they're going to have, I don't think that the bull market and the crypto winter are going to hit tomorrow. And so like if they have that happen like next year, we might be looking at the 35s, 40s. It's cyclical. It just is. They've removed a lot of the cyclicality just because of the retirement accounts and some other things that they say, but I'm like, it's still very cyclical. But yeah, retirement assets are not going anywhere. And I do think that there's a good chance that they do get into like the 401k type environment. They may need to do an acquisition for that. They did mention being open to that. And the way that they've handled acquisitions, like they don't overpay. They pay a price that is usually lower than what most people expect, or maybe fair value, and then they realize afterwards, like, man, they made a killing on this, and
Right.
they integrate those very, very well. So, great company, great culture. It's not cheap anymore. I'll say that. It's not
We're
$14, Tevis.
we're about 30 minutes in. Did you want to do that thing?
Yes, yes. Guys, we're going to run an ad mostly just because I've never done this before. Want to make sure that it's working. Tevis coached me through it. So give us a quick ad break. I'm still looking for that ETF post that I had on Robinhood. So 3, 2, 1. And yeah, we'll see. It says an ad inserted, so I think it actually worked. So
Do that thing.
do that thing. Yes, Lisa.
Do we want to make our $4 for this stream?
There we go. Made my $4 each. So I told Tevis, hey, I'll do this live stream if you buy me a Celsius. And instead he showed me how to run ads. So you can blame him for that. But
Bro, I'm out of Celsius myself. I gotta reorder more before the tariffs hit. You see me, I'm not even drinking anything right now. I'm out.
That's crazy. Yeah. I guess if tariffs hit, those would be like $6, $8 in Canadian. No, it'd be like $30.
Yeah, dude, I gotta stock up on like oatmeal and Celsius and Heinz ketchup and all the things. I shouldn't be saying that. People get really upset when you're saying up here you're gonna buy American stuff.
Yeah. Okay, so I'm not able to find the post, but basically Robinhood, I looked and they have like a managed or suggested account. I think I'm using the like the beta version of the app. You can sign up at the Google Play Store. I'm sure Apple has something like that too. And it was very interesting because you basically took a quick survey and said what kind of investor that you were and what you were after as far as your goals, your risk tolerance as well. And then it recommended a portfolio for you, or actually several different ones. And all that was just like ETFs. And so very smooth interface. I took screenshots and I can't find it for some reason. But what that triggered in my mind was exactly what you guys were talking about, like the 401ks, the pairing with companies and actually offering that product could build out very easily to something much better than TD Ameritrade, not TD Ameritrade, Transamerica, Vanguard, and the like. Like their interface is pretty lousy. It's not intuitive at all. Robinhood offers much better. We'll see. But even without that, there's a lot of upside left. But I don't know. Short term, it's not cheap. It's not $14 a share, Tevis, right?
No, not $14 a share. Those days are long gone. If I had gotten it for Christmas, maybe. If my friends weren't spiteful and wanted to screw me up, want to see me be poor, maybe. But it's a sad life, man. Honestly, I think I might buy a little bit just in solidarity with you guys for being able to ask questions.
Get yourself a few thousand shares, pocket change for you.
I don't know about that, but
you're a HIMS investor, man. You got lots of money.
I get you too.
Yeah. Yeah, the nice thing about covered calls is
investor, Roy. You have Palantir and you have Hood and you have all these other. Do you have Rocket Lab too?
No. So on that, I think we talked about that before. Matt was, talking about Rocket Lab, and he talked about it for a while, and I was like, okay, I'm going to sit down. I'm going to take a look. Now, Stanley Druckenmiller has this philosophy, which I did not adopt at the time, and it was a mistake. It's invest, then investigate. It's not that you blindly invest, but if you're like, hey, I have an idea that this could be a really good performer, then what you do is you put money in there, which will force you to pay attention to it. And then you spend time doing actual hard research over, however long. And usually for me, it's multiple weeks. When I was convinced in Rocket Lab, it wrote up from like $5 a share to $7 a share. And I'm like, hey, that's too bad. Yeah, I see the case. I see the merit. Maybe it'll come back to like $6 and I'll buy it there. Then it went to 11. I'm like, well, maybe it'll come back to $7 and I'll buy it there. Now it's at like 30 something. So yeah, I missed it. I think Druckenmiller's invest and investigate is fantastic advice in a bull market. I think it's actually necessary. And I've adjusted to that point where I might have an idea about a stock. So like one of those was Ibotta, IBTA. It's on my watch list. I'm interested in it, but I wasn't like sure at that point. Like I found some weakness and wasn't convinced entirely versus like NVIDIA. NVIDIA is something I knew, the price came down. I investigated, but I invested, got it at like 118, 119. It's back up to 135. It's not going to do like a HIMS or anything like that, but I don't need that from every one of my stocks. So yeah, in a bear market, I think that usually that's a nice thing about a bear market, and we will get another one eventually, though it may be 4 or 5 years before we really see one. But the bear market gives you that time to really investigate and then invest. And so I think it's fine to do that on that side.
I'm here on another stream to make you guys look into BlackBerry's turnaround story. One day I'll get you guys to look at it. Well, we're looking at it now, Matt. Second stream that Matt has joined, trying to get us to look at BlackBerry. Aren't they making, what were they making? They're making like GPSs now, aren't they? Something like that.
Well, so they run a basically an operating system for software for vehicles, and BlackBerry's traditionally tied to the phones, but I think there may be some other parts to it as well. Prakash is a guy that I follow on Twitter that's big and been talking about BlackBerry for a while. So yeah, it's interesting, but I don't know. I don't really know enough about that type of industry, so it's kind of like transmedics for me, like. Organ transplants is like, what do I know about that business?
The only thing I know about BlackBerry after the whole phone business sort of died is that they're getting into like encryption, or that's like the main product offering. But I have no idea about anything from a fundamental basis. I know that way back when they were one of the Wall Street bet stocks, along with AMC and along the other ones, but I haven't looked at it since maybe 2021. Let me take a look. Oh, wow. Big move up for BlackBerry, a whole $6. Well, I mean, it's up from $2.
I mean, that's good. Yeah.
Pretty much all in 2025 too. Like it, at the end of December, it just saw this massive move up.
Oh yeah. Yeah. I mean, like, so switching from hardware to software, you have much higher margins. And if they're able to do, and capture a lot of the enterprise revenue, there's a lot of upside for it. I don't really know much about that space, that industry. And I don't know. It's interesting, but not something that I'll probably investigate too much further. But hey, for those that are up, it's up 118% over the past year. A lot of it came very recently. Congratulations to holders.
Absolutely. It seems like they're riding on the back of that profitability. HIMS move up on a short squeeze? Yes, Bernie. I do think that part of it was a short squeeze. Rewind to the beginning of the stream where we're talking about that. What else did I want to throw up here? Oh, yeah. The hell with BlackBerry. Y'all are sleeping on Tempest AI.
Honestly,
this thing is up like 100 and something percent year to date, right? Nancy bought it and then it just exploded.
Yeah, it went up 13% today. Year to date, up 144%. I don't know. I looked briefly into it when it was announced that Nancy bought it. It's always lagging. Like we don't get that real time. Otherwise, the market would be crazy. But I don't know. It seemed like a pretty legitimate company. It's not like Nancy doesn't just invest in names that have nothing else to it. If we have time, we can talk about one of those that's like a pump and dump. It's a total pump and dump, and it's just crazy, the people that are involved in that. This is not one of those. It seems like they have a legitimate product, but my AI play is Palantir. They're killing it in the healthcare space too. They're not really a competitor with Tempest from what I saw as far as the products. They have like a pretty different type of offering, although AIP is pretty versatile. So yeah. So I don't know. When it's hard to buy something that's run up that much. Like if I was not in HIMS right now, I wouldn't be buying HIMS right now. I'd be like, no, it's too much.
That's the thing though, right? Like that's the exact same argument I'm using on you with Robinhood, Palantir, anything else you suggest me. Like I'm not fundamentally disagreeing with the execution of the business, just with the price that it's at, which is probably a bad argument to make because you want to buy a great business at a shitty price than the other way around. I get it. Also, just before I forget, Matt, if you are new here, consider subscribing. And then who was the other person? Welcome. Consider subscribing if you do like the two of us rambling about random stuff and occasionally throwing your comments up there. I am bookmarking questions, so keep them coming, and then we'll dedicate some time at the end of the stream to get through some of those questions. Roy, what were you saying?
So as far as the valuation, like I don't feel like so a lot of the companies I'm in, which is just nice to have run up a lot recently. So Palantir is one of those where I personally, if I didn't own Palantir, or even if I did, I would not be buying any of it here, even though I think it's an amazing, strong, powerful company, one of a kind unicorn, my largest holding. I'm saying I would not buy it. When it
Yep.
was in the 40s and 50s, like we were talking, I'm like, yeah, if I was here long term, I'd absolutely buy it at that price. No, now, not at all. If you were Tevis, if you were telling me like, hey, I'm going to buy a meaningful position in Palantir here, I'd try to talk you out of it because you're my friend.
Yeah.
But hymns, I would not be quite as vehement on it just because I see them as a leader in the space. They've run up a lot, but I feel like that there's more likely to come. And not necessarily like you have to wait 5 years for it either. I think maybe you have to wait a couple of years for it to get back up to this level and give you meaningful gains. Maybe not. We don't know yet. A lot of it depends on the compounding issue, which is going to go away at some point, probably nearer rather than longer away. But I will say with Sofi, and I don't have to convince you to buy Sofi. Sofi is a good price right now. It's not bad at all. And then Robinhood is not cheap, but if you have the long-term perspective, I feel very differently for where it's at versus where Palantir is at. Palantir grew at 37% year over year. That's phenomenal. That's great. Super high margins, ridiculous company. They have a moat like no other. Like there's no company that does what they do. They can't be touched. They such a lead, such execution, but there is a lot of weakness in them too. More so than Robinhood had like nearly a perfect quarter. It's hard to see other than just saying, hey, they're cyclical and they're not going to do 100% year over year every quarter. They absolutely won't. Like next quarter, rather, they have some rather large regulatory fines that hit them. Last shot from Biden's administration, I guess. But they'll maybe do like 30 or 40% year over year.
Yeah, the other thing to mention is, and yes, by the way, we did talk about hymns at the beginning of the stream. I'm sure we're going to mention them again at some point. I think the other point to mention is that like all stocks across the board are priced as though the market will continue rallying, as though we're in a bull market, and there's a lot of expectations baked into that, right? Because like, okay, Robinhood did 100% year over year growth, $56 billion company, and they just put up their first $1 billion. What was their full year revenue?
Is full year. Oh, I'd have to look. It's over
like 3 billion.
Yeah, it's close to 3 billion.
Yeah, that's I think what I remember from yesterday. So yeah, so like 3 billion in revenue, 56 billion in market cap, and then Palantir has like 250 billion in market cap. And what is the revenue, Roy? For 2024?
For 2024 for who?
For Palantir.
Palantir. I think it was. Oh man, I'd have to look. Yeah,
but like
it's similar though. Like the price that sells was over 100.
So my point is, and like same with Hims. I don't want to just pick on Roy's companies. Same with Hims, right? Like Hims is what, $12 billion company, and I think they're going to do what, 2 billion ish, close to that this year.
Yeah, it's
so
not.
It's not as crazy, but there's still baked in expectations with these companies. And yes, I do agree that Palantir is like 100 times more expensive than Hims. I'm just trying to make a point that what's that Warren Buffett quote? Like when the tide goes out, you see who's swimming naked. Like the tide can go out and we can enter a recession. We can enter some geopolitical macro risk. And all of a sudden people get really, really conservative with where they put their money. And you don't have so many people cutting these management teams a lot of slack. Like, I'm not saying that's going to happen. I'm saying it's always a risk. And like, that's the lesson that I learned in 2020 is like, don't get too stretched out by chasing these stupid valuations. Like just be patient and wait things out because, sometimes things get ahead of their skis.
Yeah. And revenue, by the way, for Palantir, just a little bit under 3 billion for the full year. They've accelerated a lot, but yeah, it's a little bit different story to me. It's business to business. It's a little bit different cycle. It's a lot more sticky too. So there's pluses and minuses. But no, PayPal is what I was going to say. I plan to take some gains from Hims, and that's what I plan to buy a lot of. And the reason why is not because PayPal had like the best quarter. It was a good quarter. The guidance was absolutely terrible. Their earnings call, if I was going to give them a grade, and I don't know if they have, do they have incomplete grades in Canada, Tevis?
Like A plus, A minus type of thing?
I, like incomplete.
No.
So they'll do that, especially like college level classes and above, where you still have work to do to get in to get the final grade, and so it's basically pending. That's the grade I'd give PayPal, just because a lot of what they should have talked about, I think they're saving for their earnings, not their earnings call, their investor day, first one they've done since 2021 at the end of this month. And so the market looked at their guidance, looked at what they're saying, like, man, in the second transition year, that's not what Alex Chris said, but that's frankly what they're guiding for. Very conservative guidance. And I was just like, okay, this isn't great, but it's an eye for me. Now, the stock itself, it's like down, 11% year to date. Its market cap is like $78 billion. They're buying back 20 billion of their stock over the next few years. And they're generating, I think $7 billion free cash flow this next year is the guidance. That continues to accelerate under Alex Chris. They have a lot of new products coming out that they did not talk about really at all in their earnings call. So I think short term, there's a catalyst with the investor day. It's hard to honestly see much downside. Like, is it going to do a HIMS and just go up like no, absolutely not. But for me, like, if it's a choice between holding cash and waiting for our opportunity, or holding something like PayPal, easy PayPal. I plan to buy a lot, with the HIMS gains. So thank you, HIMS.
Thank you, HIMS. Shall we get to some of these questions? I have bookmarked a lot of them.
Well, some of those are GameStop, and that was in the title for me.
Yes.
We do need to talk about your favorite company, GameStop.
Now, my favorite Bitcoin holding company, GameStop. Yes.
Yes. And that's really the news. Let me pull up one of those headlines. I think Nala sent us one. Let's see. Well, we talked about Ryan Cohen and Mike Saylor getting together.
Yeah, they took a picture together, and like nothing happened. And then now the market's like, oh wait, they took a picture together.
Well, it was partly that. And man, why am I not seeing any of my posts? That's weird. My apologies, guys. Okay, well, I can pull it up this way.
All right, y'all are asking too many questions.
Yeah, this is gonna be fun.
This is we're probably not going to have time to get to all of them, but
we can do speed mode, which means 10 minutes per question. All right, so yeah, here we go. This is Heisenberg's feed, just because I cannot find it on mine. Maybe it just didn't paste. But Wall Street Engine, GameStop is considering investing in Bitcoin and other cryptocurrencies. Now, long term, GameStop is I think, a terrible company to invest in. But they don't have debt. They have a lot of cash. They have a lot of options on what they can do and are able to do. This gives them more options as well. People have thought and clamored for, and Heisenberg was one of those two, where it's like, hey, they should just buy Bitcoin and do what Michael Saylor is doing. That may be the route that they go, and it's hard to not see that as a potential catalyst. I saw it as a low risk play that, in a risk on environment, which we're very much in, should appreciate. And so GameStop is up, a good bit, 7.74%. And it always does this. It'll pump and then it'll fall a little bit. Probably open up at like 27 or something like that. But yeah, that's the kind of play I'm in. And I like anytime that GameStop pumps, just to be like, hey, Tevis, look at this awesome, amazing, revolutionary. No, just kidding. It's a swing trade only for me, guys.
You do the same thing that Tanner does whenever Joby pumps.
Oh yeah, which happened like twice per year.
Yeah, I mean, it happened the other week, and Tanner was like, "Let's all pause what we're doing and take a look at Joby."
Yeah, no, it's so funny. It's like the first week of the year, and it just pumps, and it's like, yeah, that's Joby. And since then, he's been very quiet.
All right, let's start with some questions. Yes.
Yes.
Okay. I mean, we can start with the last first.
Yeah, so I have most of my portfolio. It's like 90% is long-term investments, fundamentals. What I see is deep value, not based on like P or anything, but a number of factors that I'm just long in, and most of those are just stocks, not options at all. So not conservative necessarily, 'cause, like you see what I'm in, like Hims, Palantir, Robinhood. Those aren't conservative, but 10% or so of my portfolio is in what I call my swing portfolio. And what that is just me willing stocks back and forth that I have no intention to own long term. And some of those end up doing very poorly. I'm like, hey, I'm just getting out with a loss. I will not bag hold in companies that I don't want to own long term. But I see short-term opportunities. Sometimes that's buying puts on stocks that I'm like, hey, this is up way too high. I think it'll go down. One of those, it's a hedge, but it's kind of an in-between thing. Through September, I bought some puts on XYZ. That's Block. That's performing very well. Partly, I think, because PayPal dragged it down. So sorry, Block holders, but yeah, them's the breaks. But their earnings probably go the other way and destroy my hedge. But that's what a hedge is for. And Bitcoin miners are in that. GameStop's in that. Sometimes, so I have a personal rule that I can only buy up to a 10% allocation of any stock unless it's an absolute unicorn like Palantir. I will violate that only in the swing trade position. That will not be long, but it'd be something like, hey, there's an opportunity here. This stock has gone down. I'll just use that portion as a trade. And almost all of that is in a tax advantage account. There's a small little bit that I play with in my main account. But yeah, GameStop's trash. It's not fundamental.
There you go. There you have it. Okay, Jesus, guys, stop asking questions. I have 23 questions bookmarked, guys. I'm gonna start charging you guys for questions. I swear.
We'll go faster.
Is Tevis interested in buying Hood now? Yes, but probably not a large amount. But I do want to buy maybe a couple of shares in solidarity for my guys who asked questions on the investor call. And that's like 70% the reason. I also did listen to the earnings call, so I am doing my own homework, my own diligence on it. So it's not just like, for the memes.
Oh yeah.
It is a good company. It is growing very well. They have good prospects. I think you asked a great question yesterday around the international expansion piece. And they were like, hey, we're going to be in as many countries as we can possibly. And I'm like, Canada. So, I think like I'm a product person through and through. I think that's one layer that I look at companies and they have that side of the business down pat. So I'm also learning the more that I'm in the market. I mean, I've been investing since 2017. And, one of the main things that I've learned is that once you find these great companies, you don't find them every single day. So it's very, very difficult sometimes. Like I have my aunt, and I think I've told you guys about her in the past, and she just keeps messaging me. She's like, oh, Hims is 59. What's the next one I should buy? And I'm like, what next one? Like, this is it. She's like, Sofi's not moving. Hims is 59.
Tell her PayPal. She'll love that one.
And I'm like, I'm going to block you if you keep messaging me. Like, stop asking me for new picks. I'm like, I'm not your bookie. Like,
yeah.
So my point is like, it is a good company. They are clearly in tune. Like they have product market fit with their consumer base and they are expanding internationally. They have opportunities there. I just don't know at, $63 where it's at right now. Like, I don't know what my potential like expected return is. So that's why I'm not going like super, super crazy on it.
Yeah. Throw up Cole's comment.
Hold on. I'm going to, it's in order.
I'll just read Cole's comment. Tell your aunt it's Joby and she'll get the picture.
Oh my God. Honestly, Cole, like I should do that. So she loses some money and then she's like, oh, wait a minute. This guy isn't always right 100% of the time. God. Okay. Hold on. Guys, you got to let me go through these in order. There's too many comments. Okay. FO, I know it's a stupid question, but do you guys see a lot of upside here from Hood? I'm also long in Sofi. So yeah, I think that if we're talking 2030, Roy, what would you put for a price target for Hood? Like, close your eyes. It's 2030. What is Hood trading at?
Honestly, 200.
Yeah,
250.
that 250 was going to be what I was going to say. So what is that from here? I don't know, like a 5x ish,
Yeah, a
less
little
than
under
that.
a 5x. Yeah.
Should I sell hymns? Hey man, if you want to book in the profits, nobody got broke doing that. If you want to buy something else that you're more bullish in, or you think you can make more money in, then you go for it. If you still believe in the story, if nothing fundamentally has changed with hymns, if you're holding for the long term, then who cares if it's 59? Like, there's going to come a time very shortly, probably, where it's going to be 70, 80, 100, you know?
Yeah. Yeah, you're not hurt by taking profits. You know yourself better. Like if this is just a trade for you, you should probably take some gains. If it's a long term thing, the thesis hasn't changed and you don't need the money, there's nothing else that you can buy with it. Why not let it ride? What I like doing too is not liquidating the entire position. Like I might sell a little bit, which that's what I'm planning to do with Hims, not selling any Hood. But I'm keeping, the larger chunk of it too.
Mm-hmm. Yeah. Okay, let's see. Thoughts on Celsius? Still holding your leaps. I never got into the leaps, so I'm still waiting to enter the leaps. Let me see what Celsius is at right now.
Smart man.
$22. Yeah, I mean, like, I'm okay where I am right now, like with Hims and Sofi. Like, I don't want to. I don't know. If I do the leaps, I'm probably going to do it on a small position. It's not like a high conviction bet for me. So I think like that's how you know that I'm losing interest is. So these are the stages. Okay, I either buy a lot of shares and leaps, or if I just want to enter a position, then I'll enter with like leaps. Or if I don't do the leaps at all, then I'm like I don't really care. Like for Hims, for example, I have a ton of shares, and I also have like a like irresponsibly relative to my portfolio large number of leaps on there because I'm super bullish and I want to be levered. But for something like Celsius, I might want a disproportionate reward relative to the risk that I'm putting on. So I might put a small amount in leaps to still get that leverage. But if I don't really believe that it's going to happen that fast, then I just won't buy the shares at all. Like New, for example, I own New, but I only own New through leaps. I own 0 shares of New. I only own leaps. So that's sort of how I think about making these plays. I also don't want to diversify like too much for the sake of it. I want to make sure that I can like leverage that money to my concentrated high conviction picks. So stay tuned on Celsius. I'm still not like really decided either way.
Yeah.
I wouldn't say Hims is expensive. Yeah. And this is also to this comment, like if you are not sure and you want to be in it, just DCA and you'll be fine.
Yeah.
Was there news?
Go ahead. I agree with you. Yeah.
Was there news about Sofi and a hotel brand? Yes, I did post news about this. Wyndham Hotels just announced in their Q4 earnings call that Sofi was their partner. I will probably like 80% be making a Sofi video tomorrow with the weekly recap of news. So stay tuned for that. If not, then we will definitely be talking about it on the Sofi Weekly podcast on Friday at 10 p.m. Eastern. Curious to know if either of you have looked at any new company or if anything has piqued your interest recently. Anything new, Roy?
NVIDIA. I mean, that was a new position for me as of a couple of weeks ago.
Yep.
It's hard to not see that playing a significant role in the next 5 years. It was something that I wasn't 100% sure on and convinced, but the DeepSeek stuff that came out, I'm like, yeah, it's solid. It's good. It's not going to be like a crazy gainer, but it'll be a good gainer. It'll outperform the market by a fair bit. There's a few things I'm looking at, but I'm not ready to really mention too much. But I'm not looking to add another position unless I exit one this year. So that's also a factor. Is I'd rather build out what I have right now and consolidate than expand out.
Yep. And for myself, not really anything new. I think Lemonade was like the most recent thing that I was accumulating after Hims. But even that, I was like accumulating it in like the $18, $19, $20 range in November, December. I would say, yeah, if I do end up buying Hood, that'll probably be the like next newest thing. Nvidia, like if they fall from earnings, like I'm staying relatively liquid. So I can just go through, with cash secured puts and enter that position. Any thoughts on Archer? Do you see them being profitable? Dude, like Joby, Archer, I'm not in the space, nor am I really bullish on that space in general. I think the concept is really cool. I think the adoption curve would be longer than people maybe realize.
So I'll say a quick piece on that. I prefer Archer over Joby. A lot of it is who they're partnered with, and that's through Palantir. That's not an end all be all. That's not enough reason for me to invest. I talked to somebody month and a half, 2 months ago that was in the special forces, like elite of the elite in aviation, worked, he's in this space, in this industry, retired now. And I asked what they thought if this like eVTOLs were kind of the future, if there was a room for them. And they're like, hey, drones, absolutely drones. Don't know about the other stuff.
Yeah. There you go. There you have it. Archer over Joby. You hear that, Tanner? Do you think Hood makes it into the S&P? Yes, for sure. This year.
I actually think it'll be this March. Like I thought they would last quarter, though, to be fair. But like after this quarter, one of the companies that they're against is the Trade Desk. I mean, like there's a bunch of
20%. I mean, they just
the Trade Desk got smashed. So they didn't have the best quarter. Robinhood had a ridiculous quarter, and so if they're kind of neck and neck, you have to think Hood has an edge now.
Yep. Fun question: which doubles from here? Sofi, Hood, Tesla, Palantir. If you are not a buyer of any and you want to buy one strictly for the race to 2x, which one would you buy?
If I was a trader, SoFi.
Yeah. Yeah, I mean, I don't really see, I don't know, man. Palantir, I guess, could defy all odds, but I think that a lot of that run, it's got to get exhausted at some point. Like, I think of that, like, David Goggins meme, you know? I think Tesla, if it breaks through like 450, it can be a straight shot to like 500, 600. But again, there's a lot of unknowns with Tesla, and I think the Optimus hype is like factored into the stock. I would say SoFi from a fundamental perspective, absolutely, like from a valuation point of view. But, if valuation ran the stock market, we'd all be rich by now as SoFi investors. So it just doesn't work like that because there is a level of excitement and hype built into it.
Yeah. Yeah, SoFi is... I still have my $25 price target. I think that people say it's not moving. It needs to stop being, terrible. No, I get it. But no, it's SoFi.
What if we added HIMS to that list? So you have 5 picks: HIMS, SoFi, Hood, Tesla, Palantir. Because I would go HIMS personally.
It could be HIMS, honestly.
From 59 to 120. I'd pick
based on price action, small float, short interest, the potentiality for an explosive quarter. I'll say HIMS.
I would say HIMS on that too.
And I'm still taking profits. That's not changing my mind.
Thoughts on ASML? I have no thoughts. Roy?
No real thoughts. I have friends in it. It's not a business that I know well, so it's kind of like AVGO. Fine company. I'm in NVIDIA. It's fine.
Yeah, my understanding on ASML is that it does have a strong moat in like that lithography aspect in general. That like there's not a lot of companies that can do what they are doing. So I think it's definitely one of those companies that I would buy and hold for like a retirement account if that was how I invested, but it's not. Sevis doing covered calls on HIMS. No, I closed my $52 covered calls this morning. And I am not doing more covered calls on HIMS because HIMS is bananas. Are you're rolling or you're going to let some go? You said
both.
Okay. How is HIMS going to be affected by no shortages in the GLP-1 drugs? Bernie, you should follow this channel. You should look at the HIMS weekly podcast that we do once a month or once every 2 weeks. Definitely not weekly, and we talk about this. But yeah, basically, no shortages means that HIMS is going to be negatively affected. It's just a matter of when those shortages ends for semaglutide.
Yeah, exactly that. I mean, we could see it drop 20, 30% in the day. And then it's going to have a lot harder comps over that next year because it's compared to that sugar rush. Still growing 40% year over year without GLP-1, and I think that that'll accelerate. But yeah, I mean that's a known factor. It's going to happen. It will have a big impact on the stock price action, and that could be an entry for some folks.
Absolutely. All right, how are we doing on time? Okay. Does Sofi hit 25 this year?
Yep.
Yes. My price target is 28.50. I think that's close to your price target too, right?
25 is mine. Yeah.
Is there a bootleg ETF I can invest in?
Thank you.
Just watch the show, like and subscribe, and that's the best proxy, I guess. Tevis, you don't post as much wheeling content. Have you dialed it back? No, I am wheeling just as much as I ever have before. I just don't post the content because it gets no views. If it got views, I would post more content, but it's just the effort is not worth the output, because for that same amount of time, my time is limited. It's finite. My effort is limited. It's finite. And I would rather put, if I have 3 hours a week to dedicate to one video, I would rather make a video about Sofi and get 10 or 20,000 views than make a video about wheeling and get, 200 or 300 views. So that's entirely what it is. I'm still doing the wheeling. I'm still loving the wheeling. It's honestly like my favorite thing. I'm doing I have cash secured puts on Sofi. I have a straddle on Sofi. I have covered calls at 17 for next week, I think, are some of them. And I have cash secured puts at 14.50, at 15, and at 15.50 for Sofi. And then I have cash secured puts on Tesla, which are going to expire worthless this week for 325, 345. And then I also am writing cash secured puts on HIMS, but I'm being more aggressive on those cash secured puts on HIMS. And then I also have covered calls for Lemonade. I have covered calls for a whole bunch of other stuff, not for HIMS though. So yes, I am still doing it. I still love doing it. I just don't make it because of the content, honestly.
Yeah. Hey, let's do a quick ad break, and then we'll answer questions.
All right, 3, 2, 1. Okay, I love it. You're a full-on YouTuber now. Okay,
yeah,
HIMS.
gotta get
Why
my
is it up so much?
$1.50.
Partially because of the short squeeze is my guess, but RFK was also nominated today. Earnings is coming up. A lot of things. Roy?
Yeah, I've got a video that I just posted maybe an hour before this. Check it out. It's less than 10 minutes of time. There's 3 reasons. I cover all 3 of those, show graphics and everything.
Dude, yeah, they need to sponsor us at this point. Like either Celsius or HIMS or Sofi, somebody ETF needs to sponsor this channel so you guys can get fewer ads. Cucumbers or pickles, Roy?
Yeah, give me pickles.
Pickles for sure, for me as well. What are some of your bad investments?
Ooh. I mean, PayPal's not been so good.
Yeah.
It's still up. I think one of my worst was actually my worst was not buying more Palantir on the run up. That's a big one. As far as loss, ChargePoint. I lost probably close to 50%. The thesis broke for me when Ford capitulated and started using the NACS. And when I've seen some comments like somebody had said that they're less bullish on Sofi and everything. If you're in a company and you're down, and for you, like the thesis has broken, like it wasn't about price action or whatever, but whatever reason you got in, you find that no longer true. You don't find a compelling reason, like you wouldn't buy and own this stock. That's, at least for me, usually a sign to get out. And I've done that. Like I could have waited in ChargePoint and been like, well, maybe they'll turn it around. I don't know what it's trading at now, but I know it's trading at $1 something, a few months ago. And I put that money from ChargePoint and I invested it in a little known stock called Palantir at like $6 and some change. Yep. So I made my money back.
For me, some of my bad trades have been, I invested in this Chinese company called Sogo. That was the Google of China. And I held that thing at a paper loss for like 2 years. And when I finally said, screw this, I'm out, it's actually really hilarious. And this is the reason why I don't invest in Chinese companies anymore. So this thing fell. And I averaged down. And then after 2 years, I was like, screw this. I'm selling at a paper loss or at an actual loss. and locked in like a 50% loss or something like that. Literally, guys, 6 weeks later, Baidu announced an acquisition of them, something like that, at like triple the stock value, and I would have like tripled all my money if I had just waited for like another 1 or 2 months. And so that was a tough pill to swallow. And then I think the most recent one is Unity. Like that one has not been good, and I've just reduced that position quite a bit. I still own a little bit of it, but again, I just booked a whole bunch of losses on it, and I'm not really like past me would be really, really not happy, shameful, embarrassed about booking losses. Current me is like, hey, I already put that money to work somewhere else where it's actually making more money, so I'm fine with it. Like it's part of the game. You're not going to win them all. I don't think we want to answer this one.
No.
We didn't. Where do you see Sofi in 5 years on growth? I think you mean stock, but we
Probably
can do growth too.
It could be growth. I mean, the loan platform is incredibly bullish for SoFi. If it wasn't for the loan platform, I would probably be reducing my position, simply because I didn't ever fully buy into like the AWS of fintech, but I thought the tech platform would be further along, and it's not. So that part of the thesis has not worked out for me. But on the lending side, like it's very, very attractive, positioned well. I think there's a lot of way to run. I'd have to see a few more quarters how that loan platform really performs, especially when there's no rate cuts in a quarter, right?
Yeah.
So I think we'll get that this first quarter, no rate cuts. We'll see what the performance is. We're seeing a lot of announcements regarding it. So that said, in 5 years, I would say, well, but this is just like napkin math and out of the ballpark. Like in 5 years, I could see SoFi at like 60, $70 maybe a share.
Oh yeah, I mean we can do the yeah. So I think from a business perspective, I think they have moved into the institutional game. The big money management. I think that a lot of their loans, the majority of them, will be loan platform business because it's just so much of an easy lift, relatively speaking. Like capital light, lower risk you take on. You're originating on behalf of others. They just give you the credit box and you just execute. So I think a lot of it will be that. I could see them having, yeah, I agree with Paul here. Like I could see them having over 30 million members because like 14 this year, probably around 20 by 2026, and then I could see them having like 35 to 40 million members, honestly, because that growth is gonna not accelerate from a percentage point of view, but the aggregate numbers are going to get bigger and bigger every year to maintain that same percentage. So, I think that it'll be a good 5 years for SoFi. In terms of stock price, honestly, man, who knows, right? Because like Palantir or Robinhood or Hims, it's hitting the stock prices of a lot of retail analysts and YouTubers and whatever. Like their 5 year targets are getting hit today. So stock is the most unpredictable thing. Like SoFi could stay at $10 for the next 5 years, and then in 2 months go to $50 or $60. Like it could happen. And I mean, you had an example of that happening over the last 3 months. It went up 100% after staying flat for 3 years. So it's really difficult to guess the stock price. I think where it deserves to be in 5 years, if this business has 35, 40 million members, like I think you could see it, $60, $70, $80, something like that. Are you stacking up cash for when those stocks have had monster runs retrace? Yes. I think for me, because I had a lot of HIMS shares that were assigned, I have a ton of cash just sitting around. I think it's like maybe 15% of my portfolio, something like that, is cash right now. What about you, Rob?
Yeah, I'm at like 5% or so cash. I'll have a little bit more cash once I take some HIMS gains.
Mm-hmm.
I'm not looking for like 10% or any set amount. I am adding to cash a little bit. Frothy yet, but it's heading that direction. I think sometime in March that might be where I'm like, okay, I need to really take some more money off the table. And it won't be like I have hedges in place. So I'm pretty comfortable with my level of cash.
Am I still working on my dividend portfolio? No. So I sold my entire dividend portfolio cactus in October, and I used all of that money to do the wheeling portfolio instead. So basically, that dividend portfolio was an experiment, and it served me very well. I think it was up. Well, it was up quite a bit because Broadcom was like my second biggest position in that portfolio, and Broadcom I think did like 60 or 70% for me. So that dividend portfolio was up, I want to say like 35, 40% or so year to date when I sold it. I sold it all and I did the wheeling portfolio and I started collecting premiums in the first month of wheeling more than I had collected dividends all year long up until that point. And so it was an absolute no brainer for me to do it. It's a little bit more effort, but it's also way more exciting because I have Webull open on my other screen every single day. So that's what happens. My dividend portfolio is now my wheeling portfolio. Okay, what is the expiry time frame for an option to be considered a leap? It's multi-year.
Yeah,
Roy?
long-term equity. So it depends on the person you ask. I usually define that personally as at least a year out. Now, the funny thing is, if I buy, and usually buy as far out as I can for time, and closer to the money, not as far out there. You want to give yourself time because the market can do anything over the short term, and short term is months, quarters, years. So leaps can burn up. Sometimes I've rolled those too, but yeah. I usually regard it as a year out or more. Give yourself the time that you need for that play. And if it absolutely pops off in like 2 months, don't be mad because you're like, oh man, I could have gotten a lot more if it was shorter. Just be happy you made money. It's okay to be happy.
It is okay to be happy. That's life advice. Roy, what do you think of Coin versus Hood? They're going
I
into
like
the
Hood a
same
lot.
space.
Yeah, I like Hood a lot more. Diversified asset portfolio. Coin is going to be around a long time. I mean, they've survived multiple crypto winners. Robinhood has as well. Robinhood's undercutting them. The rates are pretty high on coins, so I think that their margin might take a hit, both from Robinhood and also when banks are able to onboard as far as crypto and offer differentiated products. Coin does have more than just the institutional side and the individual investor side, but I don't know, man. I don't see like an incredible run for Coin to go on, especially because I think crypto winter will hit us quarter 3 or quarter 4 this year. But long term, like if you're in it long term for 5 years, 10 years, I think it's gonna be a good play. I just like Robinhood better, always have.
Right. What are your guys' thoughts on Interactive Brokers, the stock? It's up a lot as well.
Yeah, I mean, even Schwab's up. Brokers do well in bull markets. IBKR, like the difficulty there, I've never used it, so I don't know how the product is. I've heard it's good, but not as good as Hood. They're a very comprehensive platform, and they're everywhere. The good thing about that is like they can grow a little bit everywhere and do well, but I don't see explosive growth for them in the same way as Robinhood as they enter new markets, add new products left and right. Could be wrong on that. Like I don't think it's bad. I own Robinhood. There's no reason to pick second best.
Any plan on adding a cybersecurity stock to your portfolio?
I've been close a couple of times. Rubrik is the most recent one that I was looking at. It's a little bit different than a traditional cybersecurity play, but it is a cybersecurity play for sure. It's on my watch list, and I basically pay attention to it like once a quarter when it has earnings. The hard thing for me is I'm not in that industry or field at all. Like I know why it's important. Long term, I see where it's going, but it's hard for me to like differentiate between Palo Alto, Century One was another one I was looking at, and of course CrowdStrike is the big one. Like what makes it best? Well, if you talk to Century One, they're like, well, we're the best because of this. Rubrik says this. I don't know, man. I'd almost, if I was going to enter that position, I just almost prefer an ETF basket, just because I don't know enough. But no, like if you're adding cybersecurity, do your due diligence. I think that's a great industry to be in.
Can you guys make a fundamental video regarding HIMS for us who can't understand the balance sheet? I have done these videos before. They're on my channel, and I don't know if Roy, you have as well, but
no, not like that. I've actually been thinking about doing I don't know when I'll find time, but like doing like this is how you read 10Ks, 10Qs. This is what I look for in earnings releases, like that sort of thing. Just, if you've never done that before, spend some time on it. I'm sure that there's probably resources. I know Investopedia has a few things too.
I mean, you have two options. Either you make a course and get rich, or you undercut Tanner's course and then he has no more clients.
Yes, that's the way, man. Race to the bottom, cutthroat margins. Yes.
Yes, that's a good idea. I would watch those videos.
All right.
Is more talking points the only reason Tevis will add Hood to his portfolio? Yeah. So like I said earlier in this video, I think there's a couple of reasons I would add Hood. But a lot of them are because the company is doing very well. And in terms of their growth rate, in terms of international expansion, in terms of their operating leverage, I have been reading up more about them. And then obviously, I think the cherry on top of the cake is the fact that my guys got airtime as retail analysts. And that's a big thing as well. So love that. Why buy a leap versus just buying the stock? I mean, you get a ton of leverage. You can command a smaller amount of money to have command over a larger amount of shares. I mean, you can just Google these things as well too.
Yeah, and real quick on that, we've talked about it before, but I will buy leaps on positions that are, I think, very, very, very undervalued, and also stock. And then on the write up, I will sell the leaps and I'll hold the stock.
Mm-hmm. Yeah, a lot of questions about coin that I'm not going to put up because I don't know about coin.
Yeah.
How do you guys protect yourselves during bear markets in tech? I would say just the bigger the company you go, the more protection you'll get. But the less
like everybody gets pummeled in a bear market, but I mean, tech's a space that I largely understand, so I don't mind being it even in a bear market. Like I piled into Palantir 90% allocation in that too. But you can also hedge. Like one of those things you can do is buy puts on a position to protect that from the downside. You can sell covered calls as well. That's not as much protection. Cash is a defensive measure too. Like if I feel like we might be a little bit toppy, I'll raise a little bit more cash. Lots of different ways. But as a bull market goes on, at least for me, it makes more sense to rotate into bigger and safer names. So NVIDIA is one of those for me. Like, is it going to grow? Yes, absolutely. I would be shocked if I'm sad that I bought it here. But it's also in a downside market. It'll go down. It'll get hurt. But will it fall as much as HIMS? No. HIMS will get crushed. NVIDIA will fall down and I'll be sad, but that's the way it is.
Yeah. Tevis, where would Palantir fall in the next 6 months for you to start buying? I don't know, like $40, $50.
If we fall to 45 and you don't buy, I'm going to be mad at you.
Yeah. I mean, I think when I was looking at Palantir, it was 2023, and there were $20 or so, like just under $20. And I think we got a lot of positive information on their company growth and their prospects. I'm really also very bullish on the work that they're going to do with the government in this new administration. So you just add that on top, and I think like their fundamentals, if you don't account for anything else or you don't give management really a lot of rope, is $40, $50, for the stock. The fact that it's 120 or something like that, I think that's a lot of excitement in the market. But I don't have any obligation. There's nobody putting a gun to my head to buy Palantir. And so I think that if it fell down to my price, great. If it never falls, which I don't think it will ever fall to my price, then that's fine. Like I'm okay not owning everything in the market. Okay. Thoughts on a mid position grab? I don't have any opinion of grab.
Yeah, Founder's interesting. It's an international play. I tend to avoid those. I have two international plays. One is Upselera, which is in British Columbia, Canada, 51st state, so it's not really international. The other is Nubank, which is exposure to Latin American markets. So I tend to avoid international plays just because America is where it's at. I do think that there's a lot less risk with a company like Grab. I believe, correct me if wrong, but their balance sheet is very clean, that there's no debt at all. They're growing. They're not quite profitable yet. It looks like that's inevitable. Depending on who you talk to and what market they're in, user reviews are very, very good. Sometimes not as good. I think that there's probably upside for it. I have enough international exposure. I don't see it. A lot of the people that are in Grab are like, oh yeah, this is an easy like double, triple, quadruple. I don't see it that way. It's international, and it's not going to get the same appreciation as it would if it was here in the States. It's not fair, but that's the way it is.
Okay, let's see. Like 2 more questions, and then we're really out of here because it's been an hour and a half, and I think Roy wants to put in another ad at this point.
It's a run of every 5 minutes.
One every 30 minutes, baby. Let's see.
Matt FIFA Trading. I've seen that question. Well, yeah, we can do that one, and then we can do Matt's.
I want to ask Tevis. I also used to be fully bullish and concentrated in Sofi, but I switched the hood at like $30 because I kind of accepted that hood was going to grow and move faster. Thoughts on this? I mean, look, man, you don't have to be a stock market genius to read a balance sheet or an income statement and realize that one's growing at 100% and one's growing at like 30%. So, I mean, they play in different spaces. I am very, very bullish on the prospects that Sofi has with the loan platform business and others. That doesn't take away from, like, it's not a scale where if one of them is doing well, the other one has to be doing shit. Like, I'm not putting a spread trade on them. I think that the diversification is probably a good thing because even after the 100% move in Sofi and now it's at $15, like it's still undervalued relative to what they're doing and relative to their actual fundamentals. And if you don't believe me, just look at the actual numbers that Sofi is putting up versus Palantir, and they're pretty much identical in terms of the revenue, in terms of the growth rate, in terms of everything, except one of them has like a 100x valuation and the other one doesn't. So like my point is, and yes, Roy's going to argue like one's AI and blah, 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 all this shit. But my point is that Sofi should not be trading, at $15. It should be higher. And so that diversification helps you against situations like that. I don't disagree. Like I also bought a ton of HIMs. I could have put that capital again into Sofi, but at the same time, like I think it's somewhat reckless for you to just go all into one stock because even if you're right, the market determines when.
Yeah, no, I agree with that. If you're playing with like $10,000 that you can lose, pick one stock. That's great. If you're like 100,000 or more, I wouldn't like super diversify, but concentrate in a few names, spread it out a little bit too. But no, like if you're more bullish on Hood as a company, it makes sense to be allocated more heavily there than Sofi.
Mm-hmm. I will pick one more question, and then we will wrap because y'all are gonna keep asking questions all night long.
And appreciate you guys doing that, by the way. It makes it a lot of fun. We come with set topics, but sometimes you throw us curveballs. Nate, by the way, if you're still there, you've been killing it in the comments on Tevis's channel, not mine, but I won't hold that against you because you're teasing Tevis, so it's okay.
Yeah, you can have him. Let's see. Do you want to ask this one or?
Yeah, I personally, I have GameStop, which is a mini master strategy. So honestly, though, like Bitcoin exposure, I have that through Robinhood. I see no reason to chase master strategy. I was wrong on it. I didn't think it would go this high, this much. It could go a lot more. I don't. A lot of it's speculation, and I do think crypto winter is coming.
Yes, I can see both comment sections. I can put up stuff from both. Will HIMS ever make it to S&P? Yes, next year. We talked about that. And let's just get Matt's question because Matt's been great. He's on his second stream here. Yeah. And then we'll wrap.
Yeah, Btlg is a biotech play. It's a little bit different than a traditional one. But biotech is you buy and then you wait a long time. And it can pop in speculation. I think it'll probably appreciate in price anyway. This year, there's a lot of factors that I think will help biotech as an industry just perform decently. Like it's not going to be a 2019 where biotech is all the rage and genomics and everything, and it's like the top performer. But that said, I'm just allocating a very, very small bit of my position. I'll grow it. It's not even at 1% of my holdings right now. I do plan to take a little bit of gains from HIMS and put it in Btlg. not nearly as much as PayPal. And it's one of those that I'm comfortable either it going nowhere at all, or it could 20, 30, 50x. They have a couple of things going for them. One is they have basically a fully built facility in British Columbia. They have a long cash runway. Part of that is a grant project that they've been offered to, which is not on their balance sheet. And you need to look at the cash runway with the biotechs. Their product pipeline is very interesting to me. And it's not just their own personal products, but they also have a system too that they have a lot of very strong partnerships. Eli Lilly is one of those two that's probably at the top of the list, that give them a lot of funding because they want to develop and use Btlg technology. And the founder, I also like this too. He loves buying his own stock, loves it. So I don't see, I see it as potentially being an opportunity cost. It could absolutely go nowhere over the next 5 years. It's hard for me to see it, as an abject failure. And the risk, that's what I see the risk at. There's a lot of upside reward. So will I go higher than 1%? Maybe. Like I might go 2%. Is it going to be higher than that? No, I will not allocate higher than that on this type of name.
There you have it. If you guys are not subscribed to either Roy's or my channel, please do so. And that way you will not miss out whenever we do other bootleg weeklies, because we're just doing them whenever we feel like it at this point. We're not even doing a set day. We're just, whenever we want to drop a bootleg, we'll do that. The people want me to do a 24-hour live stream. They want a family. I negotiated down. And then they'd say, how many subs would I get within 24? Like, man, I don't know. Well, if chat makes me a good offer, and if Roy's there, I'll do 24 hours with you guys.
You should do a 24-hour and then have a different guest like every 2 hours. You just need 12 guests, and you can line that up.
I would have the sushi so that you guys can watch me eat sushi again, just like old times. And yeah.
The reward streams. Yeah.
Okay, really, really quick. I'll just do like the top ones. Or should I leave this for another time, Roy? What do you think?
Have you done a video on that? Do a video. Do a video on that. Just like a quick summary of your positions, just for Narasimhan.
Yeah. I'm sorry, I would have done it. Roy doesn't let me. So yes, Canadian sushi, Celsius for the energy, 24-hour for when so far each is 24. That's a great idea, actually. I like that. Roy said, dude, let me leave, please. Yes. I have to go because I am already late for something. Thank you all for being here. If you want to support the 24-hour live stream, DM me or let us know in future streams how that would work, and we'll consider it. The both of us will consider 24-hour live stream. 24-hour bootleg, that has a nice ring to it. I like that. And subscribe to both of our channels for future bootlegs, and we will see you. If we don't see you this weekend, maybe we'll see you Monday. Thanks, everybody, for being here. Yeah, live long and prosper, and I will catch you in the next one.
Thank you, guys.